What's going on? How's everybody today? Brian Parker and the Brian Parker Group. Welcome back to Know Before You Owe. Just going to take a few minutes today to talk about the no closing cost loan. And the bottom line is there's really no such thing. Closing costs are always going to be associated with a mortgage loan. If it's a purchase, they're being paid by you or I as the consumer, the buyer. If you're negotiated it with your contract, it's being paid by the seller as part of a seller concession to do that. Or it's being paid by the lender. And there's a way the lender does that. And then again, if it's a refinance, it's being paid by you or I as the consumer, the borrower, or by the lender. So how does the no closing cost loan work, and should you do it? The answer in most cases is not really a good idea, because it's raising your rate, and then if you're going to be in that loan for an extended period of time, you're going to end up with a higher mortgage payment and paying more interest in your loan. So here are the two big things that you should recognize on when you should do a no closing cost loan. Is one, actually when we're in a higher rate environment where we are right now, we have been since really the beginning of 2022. Interest rates will eventually drop. And we've seen over the last almost 3 years now where people want to buy their rate down to get the lower payment. And I get it. Lower payment, it feels better. The rate is lower, it feels better. But how long are you going to be in that rate to get to the benefit of buying the rate down? So knowing that you're probably going to refinance sometime within 18 to 24 months, the no closing cost loan becomes a benefit to you by taking a higher interest rate. And when you take the higher interest rate, that's where the lender makes a premium. And they use that premium to pay your closing cost. So maybe instead of having a 6.5% rate, you might have a 7% rate. Yeah, and your payment might be $100 per month higher, for example. Okay. But if you paid $3,000 in points to get a lower rate, for example, it's going to take you 30 months to realize that cost savings. Okay. So knowing that rates will drop probably within the next 18 to 24 months, if you have the no closing cost loan, you keep that equity, you keep that money in your bank account, you use it to make that little bit higher payment until you do refinance. So the no closing cost loan really only exists because your lender's charging you a higher rate. Should you do a no closing cost loan when we see interest rates dropping? An argument, yes and no. I would always say no. That's just my opinion, because you can roll your closing costs in if you're doing a refinance and all that. And it is likely that if you've bought a home in the last 30 months and your rate's somewhere between 6.5% and 7.5%, you're going to refinance eventually, and you may refinance a couple of times. So it could make sense to do that no closing cost loan because you never know if rates keep going down. But my opinion, I take the best rate when we start going into a lower rate environment. So the no closing cost loan doesn't exist. To get that no closing cost loan, your lender is charging you a higher rate. When is the best time to do that? Sit down one-on-one with your local lender or reach out to me. And what we do is we do an analysis and what's best for you, your family, and your situation. I'm Brian Parker with the Brian Parker Group. As always, God bless you. We'll see you next time.